Hi, everyone. It's Friday, which means it's time for our weekly wrap up. I'm Stacy Scott, and I'm here remotely with Graham Wickham, President and CEO of Wickham Financial and Insurance Services. And Graham's going to fill us in on the latest happenings in the market this week. Graham, what do you have for us?
Yeah, thank you, Stacy. A pretty exciting week. We got a lot packed in. First off, I think we're looking at earnings. This is the big earnings. Now we're comparing this earnings season to last earnings season. And the comparables, that is a challenge for some stocks. Listen, some of the average stocks usually beat earnings expectations somewhere between 3 and 5%. But right now, the average stock is beating earning expectation by 18%. That is absolutely huge. And it could be a real challenge going forward when we start using comparables when we're in the middle of the pandemic, at the real true precipice of the reopening trade. A couple of other things that are front of mind for me right now is the Delta variant and how that may be putting a pause or a real question mark on the reopening and the effectiveness of reopening the economy. I think going back to school in the Delta variant, I think going back to school and getting back into some normality, the market's starting to think about that. Traditionally, a very still challenging time in the market, even though this July is actually looking pretty good so far. We'll see how, everything works out for the rest of the day. But, July is turning out to be pretty decent. I'm not going to say that's always been true in the past. A last couple of things, we're still seeing the pressure of the Chinese government pressuring Chinese stocks that are traded in the United States. And I brought this up a couple of times because it's really important. You have to consider these stocks and the effect they might have with your earnings on your accounts. If you own those names, they're down 25, 50+%. Now we have to think about, could they be possibly delisted? Is there going to be some additional U.S. regulation on those companies? So that can be an area that's under a lot of pressure. So say, for example, you have an emerging markets fund for some equity exposure overseas. Like EEM, which is an ETF for emerging markets, it has 30+% in Chinese exposure. I'm not making a recommendation that's a bad investment, but we got to make an evaluation. Do we need and do we want that much Chinese exposure in our investments, right? When we have really no control on what the Chinese government might do and affect those stocks. It's really that trickle down, which could pull other stocks into it that really aren't Chinese based. You also have to think about companies that have revenues that they derive from China. Caterpillar, Apple, one of many names. So you may have more Chinese exposure or more exposure internationally or domestic than you think, depending on where they're domiciled and where they derive their revenues from. Lastly, one word of caution, but I also think just good pragmatic advice. Listen, revisit, review, rebalance your accounts. If it's with us, we're going to be reaching out. If you're working with someone else and you're visiting us on this call, you should be having that conversation. There's an old saying in the market, pigs get fat and hogs get slaughtered. We don't want to be hogs, right? But we want to be greedy in a very good way. So let's reward yourself, take profits where it makes sense. Don't stretch too far on valuations, taking too much risk. I don't know if it is the best time to be doing that right now, even though we have great earnings, really low interest rates. I think a lot of the inflation's transitory. And listen, we got that child tax credit, $3,000 or $3,600, that is going to families. And that's going to be pushing the economy. So we got a lot of positives on top of some negatives. So that's pretty much what I see this week.
Great. Well, that's a lot to think about and good advice as usual. So thank you for that. And thanks for joining us, everybody. And please don't forget to check us out on our website and continue to look at us on Facebook with the content that we're adding daily there. Thanks so much and hope everybody has a great weekend.
Hey, one last thing, Stacy. Sure. I do want to highlight that we have our August classes coming up, our multi-day retirement planning courses for August. So really kind of last minute, if you're interested, reach out to my team on that. Also, we have our October classes that'll be coming up, and we'll be rolling out the time and dates for those. But great multi-day classes if you or a family member or a coworker want to get some great financial education on retirement.
That's right, Graham. We'll happily help them out if they just give us a call. All right. Thanks so much.
Take care.
Bye.